Welcome to the Marketecture podcast. I'm Ari Paparo. I'm joined today by Eric Franchi and our special guest, the one and only Joe Zawadski, the founder of MediaMath, the partner at Imperium Ventures, and the chairman of a new entity called FXM that we're going to hear about. Joe, thanks for being here.
Thank you, Ari. Thank you, Eric.
Hey, Joe. Nice to meet you.
For those who aren't aware, Joe and Eric are partners in Imperium Ventures, so they probably see each other a lot. So it's all one big happy family. Before we get started, I just want to plug our latest interview at Marketecture TV. So interestingly, we interviewed Tim Vanderhook, the CEO of Viant, in the same week in which there were rumors and there was a Digiday article speculating that Viant and MediaMath were going to merge. So it'd be interesting to hear from Tim. He talks about MySpace and solar panels, if you could imagine that combination making sense. And it's free for the rest of this week on Marketecture TV. All right, let's get into it. So, Joe, I just tripped down memory lane for 1 second. Am I recalling correctly that we met when you did a consulting project for DoubleClick to tell us what was happening in programmatic advertising? Is that an accurate memory, me and Brad Bender hiring you to teach us about programmatic?
Amazingly enough, that is true. I was left my last business X+1, Poindexter Systems, prior to that, and was just getting MediaMath started in the early part of 2007. And in those days, DoubleClick, prior to Google, although I think that was just starting to be in the works, was trying to figure out how to support the buy side, how to do more sophisticated things around optimization, the ad exchange, 1.0, a gleam in the eye. And Neil Mohan, you, Rubenstein, sort of an amazing cast, was brought us in and said, let's chat. Let's chat about the future of the buy side and the future of optimization.
So you basically wrote a PowerPoint for us, got paid for it, and then used the money to start MediaMath. Is that accurate?
Yeah, and I think
more or less.
And I think DoubleClick used the output to, build a pretty good next chapter.
Wow, you're the Johnny Appleseed of programmatic. So let's talk investing first. I guess this is both for Eric and Joe, since you guys are partners. Imperium is a firm that's looking and investing actively in ad tech, which is very counterintuitive, counter a lot of the narrative. So what are you looking at and how's it going?
Joe, I'll let you start. Walk through sort of like the themes and how you think about stuff, because they hear from me every week, and I could jump into some specifics from there.
Fair enough. And it is, this is so very meta because I've shared with Eric before that I find it fascinating that I listen to this podcast and I take Eric's, voice from Zooms during the day to, occasionally drive time with my wife. And now I'm producing one of these things, and I think it's like a nested third order thing going on here. It's amazing. How do we think about things? Your point's right. I think because we have invested our, lives in this space, we are tried and true sort of ad tech, martech, enabling technology, enabling service. And that's been sort of consistent, sort of despite the generalist VCs, flirtations with the space. And so, we're often looking at the categories that we think will become important in, 5, plus year time horizons. And then looking at the companies inside of it that we think, will sort of define that category and sort of emerge, as winners. And, I think we benefit, both from the, experience as sort of former operators. And then because we're, sort of sector focused and sort of consistently so, I think we like to keep our, our sort of skills honed in terms of like what's going on and how are clients thinking about things and, brands and agencies, how does, what's going on in the media landscape, how are platforms, evolving in terms of, their sort of, competitive frame, what's going on with regulation and privacy and et cetera. And it's kind of made for an interesting model.
Right. So what are the things you're looking at that you think are going to be big in 5 years?
Yeah, so it's funny. Like had you asked that 5 years ago, I think we called some of the interesting ones, on like CTV and retail media and et cetera. I think the ones looking 5 years out, thinking a lot about what are the horizontal capabilities that if you assume that we get through this, particular moment of like punctuated equilibrium where I think there are a lot of the fundamentals that are being, rewritten, whether it's, again, sort of Apple's impact on, sort of acceleration in the, change to how companies in the space sort of, move data around, how identity works, how, regulators, both through laws and through, litigation are, forcing changes to the underpinnings. Then you say, okay, you're going to come out the other side of this, and the fundamentals will look different, and so that leads you to probe into areas like, what is measurement and attribution going to look like at the other side? If you assume continued fragmentation, because what's happened in retail media will not stay localized in this vertical, every other vertical will have their own sort of vertical stacks in B2B and pharma, automotive, and the like. And from the marketer's perspective, you're going to have yet another wave of sort of complexity to navigate. And you say, okay, what are you going to do about that? And this idea of cross media horizontal capabilities in places like creative, for example, is an area that we think there's a lot more future opportunity. Clearly, the AI solutions are going from being below the waterline capabilities that ad tech was actually a early adopter of, and Ari, this better than anybody from from the early days, but it wasn't sort of part of the popular consciousness, and it was not something that the end user was necessarily exposed to. But now it's out there, and companies like InstaLily, for example, that's creating basically AI middleware that connects the kind of latest and greatest across modern sort of AI and sort of generative solutions, and making it tuned for the marketing department. I think there's a huge amount of opportunity there. So creative, AI in various applications, and then sort of measurement and attribution. Those are all areas that I'm particularly passionate about.
Right. And what do you say to the haters or the doubters that say ad tech is over? It's been won by a mixture of the Trade Desk, Google, and Meta, and now we're all fighting over scraps.
Well, it's not. You're not seeing it in the data, even just on the the retail media and the CTV front. I think people are appreciating that there are meaningful pockets of growth that are coming out of areas that there was an inexorable belief that every incremental dollar was going to a handful of players. And you look at Amazon, you look at what Apple is doing to the existing status quo, and then anticipating what will come afterwards. And you start to appreciate, things continue to change really, really quickly, and there will be a new set of winners in the market. Now, it may be on top of and inside of those platforms. Like I like to trade desks what's old is new in terms of powering sort of an app marketplace or the like, kind of on top of their infrastructure. But that does mean that there's dozens, hundreds of companies that can start at solve problems, create value, and tackle things that in a lot of cases people didn't necessarily think were problems.
Right.
And I won't front run myself on sort of FXM, but there's a huge amount of, I think, opportunity sort of above and below the ad stack, if that makes sense.
Yeah, sure. So a lot of people, frankly, ask me for introductions to you guys. I think they contact me on Twitter and they're like, hey, can you introduce me to Eric or Joe? So it would be helpful, I think, for a lot of our listeners to hear, like, what are you looking for when someone sends you their pitch deck and it's an early stage company in this ad tech, MarTech world looking for investment? What's a good pitch look like, and what are the things that you're probably going to pass on?
Joe, you want me to take this one first?
I was going to say, like, that's.
So wait, before you do, my understanding is like basically, Joe, you're good cop and Eric's bad cop. Is that a good characterization?
No, I think we bring different lenses to things. Eric is a consummate operator. He's he is the guy that runs the investment processes, is the one that sort of brings the broader Aperium portfolio around a company, both in the evaluation stage and then in the support for those businesses. So I will ask him to take the baton. But no, I think I generally like things more than Eric does. That is true. I think that's where the good cop reputation comes from. But I also think our viewpoints have sort of, after 5.5 years, have converged into, we kind of know what we collectively like, and we know the things that we both collectively avoid.
Okay, so I interrupted my own question. Eric, tell us about what you're looking for, what you're not looking for.
Yeah, absolutely. Just one more beat on that. So I think it's less good cop, bad cop, and more, I think, we've sort of like stylistically, we're different. And I think we've been referred to a little bit of it as the odd couple in terms of, how we might work, how we might communicate, how we might pack for trips. We've got like opposites in some pretty funny ways, and we can talk about that offline. Anyway, so
You guys share a room when you go to camp?
no comment. No, we don't share rooms. Anyway, so what we look for. So I think, number one is a business operating in these areas that we think are, super interesting and poised for the next generation of transformation and growth, right? So obvious areas from a category and vertical that we might look at is very broadly, this shift to streaming a la CTV, the retail media wave, the, sort of like all things next generation infrastructure. Those have been great areas of, investment for us for now 5 years. And we think there's a lot of growth ahead. And layer AI sort of as its own vertical and on top of it, right? So it's like, are you playing in an area we think is poised for growth, or is there something completely not obvious that we're missing that, might be sort of an interesting adjacent market? So I think that's number one. Number two, we weight team extremely heavily. Doesn't necessarily mean that a team needs to have ad tech experience, ad tech chops, but, some sort of like interesting story, history, domain expertise in particular, as we talk about AI. I think we're going to weight that really high. Number three, it's going to be vision. Can we get behind what a team believes the future looks like if it's something that we might not necessarily think it ultimately looks like? And then, as we go down the line, what does the product look like? What is the traction, so on and so forth. So, we like to be early stage investors for a number of reasons. We think we're sort of particularly suited to that from an investing standpoint. We think there's, obviously disproportionate returns from that standpoint. And, the earlier it is, though, the more we need to rely on our conviction around team and vision rather than product and market and traction.
Right. So what sort of traction are you looking at, or is it just vary?
I mean, we've invested in businesses. Some of our best investments, frankly, have been two founders and a PowerPoint. And that's not necessarily the rule. From a traction standpoint, is there some sort of evidence of product market fit vis-a-vis successful initial pilots? Or, is this a business that's existing and operating and, is on the way to some sort of, kind of sweet spot of ARR that might make it a classic seed or A stage bet?
Got it. Joe, anything to add?
Yeah, it's something that, Eric often says. So I'm glad I get to share it, but it's often like, where can we be helpful? Right. And so, companies that are sort of interested in connections to other companies in the portfolio, companies that, are sometimes early stage and they have the classic questions around, how do I navigate the agency, for example, either at the operating agency level or the holdco level. Companies that are in they call it the A stage. So, have a working product, but are thinking about, globalization. How do you sort of take a UK based business, for example, and, make it relevant to the US, and what are the, tips, tricks and traps to that. And, so we tend to obviously gravitate to businesses that, we understand, and we kind of understand the sort of secular trends that they're, sort of getting behind. But then we also think, okay, why Aperion in particular? Where can we, sort of create leverage or value in addition to, a reasonably small seed check, and that's kind of where we like to focus.
Well, let's talk about your new thing. So FXM, the F and the M are capitalized. The X is a lowercase x. I guess that's official. This is sort of in the convergence of ad tech and finance. Why don't you take us through that, Joe?
Yeah.
First, and also, what's your involvement?
Yeah. So maybe I'll connect it to, Aperion a little bit. So, one of the things that, Eric and I have been focused on is, okay, where does the franchise go? And then to some extent, it's also been about supporting later stage businesses. So either the, fund one companies that have grown up and are performing, and we're, talking about a B round, for example, and often ones that, look like industry utilities, and we can help support them not just with, corporate investment, but also catalyzing strategic investment, like 95, Iris TV, or the otherwise. And then we also look at the other end of the spectrum and said, hey, in most cases, we're responding to an existing team with an existing idea. And again, it may be, two people in a PowerPoint. It may be a, working product with commercial traction, but it's early stage, and we're kind of supporting the entrepreneurs. What happens if there's a very, very clear opportunity and nobody's doing it yet? Well, why don't we do the sort of the classic, perhaps now incubation? Think about sort of a domain-focused AliCorp 2.0. Maybe the sort of best comment. And FXM is first on the list, and perhaps first in my heart, of sort of founding that business. Although quickly moved to bring in a founding team and a founding CEO. And so I'll talk a little bit about maybe the name is a good transition, but FXM is Finance X Media, and that's both X Media now focused on the evolution of how media is financed, and then also the fact that I think first 25 years in the career was largely around getting the CMO to appreciate that the CTO is pretty important and vice versa. Like the joke at the beginning, right? A lot of people went into marketing because they didn't like technology and they didn't like math. And then, lo and behold, here we are, and it's just the sort of underpinnings to kind of modern marketing. Great. So, obviously lots of work to do. Let's not claim victory. Acknowledging that there's another, set of departments that need to play nicely, and that's the CMO and the CFO, and ultimately kind of the rest of the C-suite. And for a really good reason, right? You think about how big of an investment, media and advertising is for most companies, and it's like second or third, single cog on the, corporate budget. Vinny Romaldi over at Hershey's, I'm sort of a friend and someone I just really respect how he thinks about the world. But he said on this panel at the Possible conference that we hosted, he said, look, Hershey's number one cog is cacao, and basically our number two cog is the media that we buy in order to market our cacao.
Right,
and that's kind of true across any company, any vertical, anywhere in the world, and given its size and its importance, and the fact that marketing is such a differentiator, where a lot of other kind of moats have eroded in sort of today's world, you're starting to see a lot more CFOs, a lot more CEOs, a lot more boards to focus on, okay, like how am I actually investing this money? So that's sort of the backdrop.
It was quite an elevator pitch. I think we're on the 60th floor already, and we're getting that buzzing noise.
You did tell me, you were like, hey, try to keep your answers short. Now it's like, have you met me? So,
all right. So we're finance and media. Okay. What is it? What does it do?
All right. So here we go. It's basically a fintech for media, or a fintech for ad tech. So we kind of look at the way that media is currently financed and realize it is ridiculous. It's ridiculous that the money is attached to the transactions, the technology transaction flows in this like super complicated space. So bear with me for like a little bit more, now 40,000 feet. Advertiser gives money to an agency, who gives money to a DSP, who gives money to an SSP, who gives money to another SSP, who gives money to a publisher. That's like an average supply chain, right? And right now, every one of those entities is basically managing its own like working capital, because everybody has clients that want to pay them slowly. Everybody has suppliers that want to get paid more quickly. And there's, a lot of unnecessary tax, both like hard financing costs when you, finance and refinance the same, dollar from Procter & Gamble 3.5 times on average at the cost of credit of these small startups in between. And if you zoomed out and you said, well, how should this actually work if you designed this, this $500 billion media ecosystem in a different way? Well, you wouldn't do it like that. And so I won't give the whole FXM, story, but basically we're a conduit between the capital markets, supply chain, trade finance, capital sources, credit sources, and ad tech, and basically making it easy for the industry to pay for its media in a better way than it is today.
So one question that comes up for me on this conversation is that aren't there parties, who I won't name, who really benefit from the dysfunction in the financial chain in ad tech? They like to pay really late, really slowly, keep vendors on their feet, et cetera.
Of course. Yeah. I mean, that's, never try to convince somebody of something if their paycheck is dependent on, them not understanding it. But that's been true throughout. I think,
yeah.
It's sort of fun being stubbornly looking to sort of change the way that folks do things. But it's a good acknowledgement. Ultimately, consequences of that are greater than the value. I think a lot of it is just legacy behavior. It's just kind of the way things have always been done. We basically found a way to unpack about 20% or, call it high teens % of the value that goes to this ecosystem, take it out of unnecessary financing, both hard and soft costs, and redistribute it to the principals, right? Give advertisers money back or extended time to pay in a way that doesn't put a lot of pressure downstream from them, right? Like Dr. Pepper Keurig, 360-day payment terms, do all your work for me, agency, platforms, media companies, and a year from now, I'm going to pay you, right? The model just doesn't make sense. And the reality is that the cost of dealing with that is greater than the value that the Dr. Pepper Keurigs of the world actually capture. But basically, we can do it in a way that doesn't cause everyone to feel a lot of pain.
That was like a light bulb moment for me when everything was in its formative stages, where Joe and team identified that 20% effectively tax, which is probably a large percentage of the so-called ad tech tax that we love to talk about on this show so often. And the value extraction may not necessarily be like operating ad tech companies, it's banks.
Someone pointed out to me that there's sort of a lower limit on how far the fee from a DSP can go because it's relative to interest rates. So interest rates are now 5% or whatever, 5.5%. So if you ask your DSP to take a 7% fee on their media, they have to think really hard about how those two things interact. So I don't want to finish this conversation without talking a bit about MediaMath. So that was a big part of your life. 12 years? Is that how many years?
Like 14.
14. Oh my God. Did amazing things. You're not involved with it at all anymore. So I guess what worked out differently than you expected? Like if you were to read the MediaMath business plan 14 years ago, and now in hindsight, how did it not work out the way you expect, or did work out the way you expect?
Yeah, look, I'm remain sort of super proud of the organization and what it accomplished, just in terms of advancing the cause of all these things, right? Media and math, being one of the the pioneers, I think, in kind of the modern modern marketing, and that was sort of true throughout the most of the the company's history. There were a couple of key moments, and some of the sort of channeling of the natural desire to keep innovating was one of the things that I think made the sort of company great right from the beginning, and sort of constantly kind of rethinking what's next and what's possible. That was true around transparency. It was true around kind of supporting brands and agencies sort of perhaps earlier than the market realized was sort of the right time. We're seeing now, of course, that brands are quite involved, but obviously thinking about it as a triumvirate, or thinking about it as a sort of a collective where everybody's sort of working together to solve problems. I think those are all the right ideas. I think sometimes alignment and making sure that both the market and the internal organization were all moving in the same direction was sometimes a challenge, just as companies scale and needing to sort of incorporate that the long run is made up of this series of short runs, and you've got to bring everybody along with you is critically important. And then had a very fateful, ultimately, decision to bring in private equity, where the misalignment and the kind of lack of everybody working together is ultimately what caused the business to not sort of achieve its perhaps its manifest destiny, at least in its sort of current form.
Right. Those PE guys don't play. They just took Instapot down. On that note, let's take a break. So we have a lot of news of the week. We want to talk about the EU demanding the Google split, the MadHive monster funding, and some other things. So we'll be back in one moment. So, news of the week. The big news is that the EU is joining the US in demanding that Google split up. So, the EU issued a preliminary finding that Google's dominant and abusive. It was a pretty brief document. I don't think anyone's seen the long form. They put out something that was sort of akin to a press release, saying that the only remedy they saw was a split. They didn't explicitly say that the publisher side should split off, but it was implied, and they had a diagram that was kind of humorous where they just had literally a clip art scissors chopping AdX and GAM off of Google. I don't know what they were thinking with that. And as a recap, I'll note that the U.S. Justice Department suit also is explicitly asking for that as the remedy, that Gamonet gets spun off. None of them are asking for YouTube or DV360 to have any constraints on them. Super interesting, in my opinion. Joe, any thoughts on this?
Oh, it's a complicated answer. It really is. I don't know.
Would you take the job if they were like, Joe, we need you to run GAM as an independent company?
Other than trying to avoid deep operating roles, which this would absolutely necessitate, I think it'd be pretty fun. I think the Google has such a important role in the underpinnings of how the industry works. The opportunity to kind of define how the market is going to work next with so much scrutiny from all forces, where almost any answer is going to make somebody sad, is just, it's got to be brutal. And some of the reasons why there's like real benefits, right? Like a super fragmented, unregulated market without some guiding force, even in the form of a commercial entity like Google, is pretty chaotic, right?
Right.
And I don't know. I don't know that net benefit of a split up, especially with the kind of incentive and untangling, is like necessarily better for the actual industry.
Yeah. Would a publisher make more money with an independent Google publisher ad stack than they do now? I think there's a real question mark on that. They might make less money. It might be more competitive. They may have more options, and Magnite could come in and offer them, a better option than they currently have. But the integration of this ad stack into the rest of Google probably has enormous amounts of benefits in terms of generating additional yield.
Yeah, I think that's right. All right, when Connor was on from Luma, when the U.S. News broke, we pegged our odds. I think we came out at like 50-50, right?
Yeah,
of a breakup actually happening.
Yeah, I'm on the yes side. I think it's going to happen.
Yeah, but I think amongst the three of us, it was 50-50. So questions. Number one, does the EU doing this tilt the odds in the favor of a breakup happening? Maybe.
Yeah,
right?
probably.
I think that's,
maybe.
Yeah, that's number one. Number two, the alternative is some sort of massive fine, which Google can pay. Right? They've certainly got the cash position to do so. Does that become more likely? And then, number three, to Joe's point, I haven't really thought about it in that way before. Like, is this actually going to be a net beneficiary for the ecosystem that's been built on top of it? That's a no. So this is like kind of weird the way it's going. My only ask is, Joe, if you take the job, let me run PMax.
Sure, for sure. Yeah. There's something, to this. Like, does the current state of tension and scrutiny, is that a perpetually good thing? If Google was just in a position where they were really, really thoughtful around anything that they were doing internally, they were also making available externally, where they weren't doing some of the things that, created the most concern for people in the, explicit sort of self-dealing and, kind of below the line economics or bias. If it was a truly open, regulated system, there's obviously caveats and there's, risks to that as well. But is the current state of tension a perpetually good thing? I don't know.
Yeah, I think it's also interesting that almost all of the abuses were in the past. The state of the Google ecosystem at this state doesn't have first look, doesn't have last look. They're not doing Bernanke anymore. All these things that they did, these abuses, are gone. And so you could argue that we're solving an old problem, or that regulation would be a better answer on the sell side. On the buy side, it's a different story. And like I said just a minute ago, neither the US or the EU is demanding changes to the buy side. So DV360 will retain its exclusive ability to buy YouTube and a lot of other benefits, which in my view are plainly anti-competitive, but I'm not a lawyer and I didn't file the suits.
And at the end of the day, these are transactions that the SEC and other sort of like regulators they gave consent for, right? So to your point, it's like going back and undoing things that were done 15 plus years ago.
Yeah. All right, let's move on. So Tremor, a public company that was built on many, many acquisitions of many, many different brands, has rebranded as Nexen, Nexxen. Quick thumbs up, thumbs down on the new name.
Cool. Palindromes are cool. I wish there's a way to do it where you didn't just have like left-right symmetry, but you had top-down symmetry. Like just even just capitalized N's and then figure out what to do with E's would have been really cool.
I was thinking about getting the domain like UEXXEU, which would be upside down because they use lowercase n's.
I'm thumbs up. I think, as companies reach a certain maturity level and, there's been significant acquisitions, you got to do this. So Magnite, I think, has done a really good job of, over time becoming Magnite, where it was Rubicon Project and then Telaria and so on and so forth. So there's, I think, now a well-trodden path to doing this to move on to the next phase of growth, and looks like they've done it. And Nexon is as fine a name as any. It's super hard to name companies. Like it is really hard to name companies between every English word being trademarked, between the ability to sort of like fight over sort of like generic words. You have to either create your own word, i.e. Nexon, or you need to move on to other languages, i.e. Aperium or Kokai.
Wait, Aperium? What language is Aperium?
It's Latin. It's Latin for open. Yeah.
Yeah, I used to make this joke that you couldn't trust an ad tech company that had an X in its name. And someone's like, your company's named Beeswax. And I was like, oh shit, I forgot about that X. So that shows you. The one thing that mini controversy, we always have to have some controversy on Nexon, is that their logo looks a lot like Freewheel's logo, and they are a direct competitor to Freewheel. So they if you look at the two logos, you can see a bunch of tweets about it. They're both purple. They both have these weird backwards lowercase e's. It's a bit close.
You gotta watch that stuff. There are infringement firms that just look for these opportunities, and obviously these are businesses they've got the capacity and capital to duke it out. But who wants that?
Yeah. I don't think it was intentional, but it is pretty striking. All right, so there was a pretty huge funding announcement. So we're in this world where there's no M&A going on. There seems like there's not a lot of funding going on. It's a bit quiet in the financial world. And then MadHive, a company that, probably not a lot of people have heard of outside of the ad tech bowels, raised $300 million from Goldman Sachs. So that's a big number. Eric, some thoughts on this?
Yeah, no problem. I do take some offense to you referring to ad tech as the bowels, but what? Or the bowels of ad tech.
This is the bowels of ad tech.
It's not at all the bowels of ad tech. It's outside of the fact that it's not an Aperium company. This is CTV, an infrastructure for CTV. So a couple things. I think A, validates the original question. One of the original questions you asked Joe, which is, what do you say to people that point to ad tech as a category that's not good for investment? You see like one of the best white glove, I don't know what you call Goldman Sachs financial firms making an investment in a ad tech company, a CTV focused ad tech company. So I think A, sort of just validation that this has been and will continue to be a great sector and subsectors to invest in. That's number one. Number two, 300 million is a lot of money.
It is.
So our buddy ad tech god asked a question, or tagged me in a question like, what the hell do you do with that amount of capital? And I think the classic examples are, number one, double down on sales and marketing. Number two, have plenty of powder for acquisitions. And number three, international expansions. So I think they had some pretty generic stuff to say, and I'd imagine all of that is swirling around in their mind. I mean, to me, I would be doubling down on AI, and you need to have, in today's world of GPU cost and sort of like talent cost, significant capital to put to work to invest in AI. So that may or may not be something that they're necessarily thinking about. But I mean, to me, I wasn't surprised. Like there's very few scaled CTV assets that are out there on the market. So again, when our portfolio company Transmit Live had that other like sort of like large partial exit earlier this year, it's like these companies are doing great. They're rare assets. This is where the world is going.
Couple of thoughts and maybe additive to that. I mean, looking at the point number one, I think sometimes people forget that, big financing rounds of $300 million into, late stage private businesses probably have a meaningful amount of secondary.
Right.
So it's not all going into the business for, value creation, organic or acquisition. But of course, Goldman can always follow up this investment with subsequent ones. So that's a path forward. So that's point number one. Point number two, it does seem like Goldman is sort of circling around perhaps a broader theme, right? iSpot, human, and again, not even entirely sure they're all coming from the same group. It is a pretty big organization. These are the Goldman Sachs, but if you look at the through line of some of the investments, it does seem like a disruption, perhaps in the TV measurement in MadHive. Its real differentiator, I think, is perhaps less about the sort of self-service CTV. It's a little more about the access to the local media and the fact that a lot of the broadcasters also use the platform to power their sort of distributed local sales forces to be able to kind of self-service into the into their own environments in a lot of cases. And so there's a little bit of like other country heard from orthogonal assets that seem to be combining into a bigger thesis around where this could go. A little bit like how GTCR put together Dreamscape, and there's like a very clear thesis around the kind of media planning side of the equation. And I think some of the scaled PEs are perhaps both opportunistic when they see single deals that have the characteristics of growth and profitability, and a cap table that's ready to invite in a presumably a new majority owner, thing one. But if you assemble enough of them and you get them to work together, you can sort of move markets. And I would be looking at that as the sort of the underlying thesis behind these things.
Yeah, I think Goldman is also an Innovid, which went public later. But I guess one follow-up question, which is if we didn't see the valuation, but I think people were saying, some people are saying 750 million, someone were saying $1 billion as the entry point for Goldman here. That sort of implies that they expect the IPO market to open up and this to be a candidate, or that's how I would read it. Is that how you guys would read it?
Yeah, I would imagine. Look, Goldman knows how to make money, and I think that's the other thing that I mentioned in the thread on Twitter. So even if this was like mostly secondary, this signal is Goldman's coming in into a market that they've got a thesis around, and they're investing, and they're doing this to make money. So yeah, I would imagine this ends up becoming part of just speculating some sort of potential public story, or there's some sort of like larger PE thing that maybe sort of like building in parallel, thesis building in parallel per Joe.
All right, I think that's a good place to stop. This was a great conversation. A lot of really interesting news this week. Joe, thank you so much for being here. This is and congratulations on your new thing, FXM. And keep in touch on the pod. Maybe we'll have you back when things develop even further.
Love it. Would be honored to be back.
Thank you, bestie.
Thank you.
Thank you for subscribing to Marketecture. New interviews are added every week at marketecture.tv and your favorite podcasting app.